we pick out the defense and the railway space? Because that, after getting off to a very heady start, seemed to have fizzled out a little bit. Do you think that the party is over when it comes to this space, that one needs to be just very selective when picking out names?
Yeah, latter one. I think the stocks had run up quite a bit. And defense, you can't evaluate quarter on quarter. The order book plays out over long periods. In some cases, could be 8 years, 10 years, and they have different milestone payments. So, probably a lot of good news got upfronted in the price. Was visible in some of the PSUs trading at 30, 35 multiples. So I think some consolidation happening, and you got to be more selective in terms of because the market probably wants results every quarter, and that may not come through. The order book can be lumpy, so be more selective. I think while the story remains, I think the bigger story there is import substitution, and if you dig deeper and get into some smaller ancillaries, I think there's still some opportunities. So a lot of tie-ups happening in terms of IP transfers on the import ban, which is around 491 or defense items which have been banned. So you got to go product-wise in terms of drones, ammunition, hand grenades, Pinaka rockets, etc., and then figure out. I think for now, probably the prices look a little stretched in most pockets.
Right. Gurmeet, let's also get in your take as to what the outlook is within the entire pharma space. Do you believe that there is an opportunity to nibble into some of these stocks, or expensive valuations would deter you to a certain extent?
Mixed, actually. Pharma is quite a big sector. It's not one theme. I think if you recollect, we had this conversation that IT and pharma looks the most hated space about a couple of months back. And since then, I think pharma has taken off. I think the more action has been in branded generics and also some of the US focused companies. I think Cipla reported a beat on all fronts, last week on numbers, growing both in US, led by Revlimid, and Indian markets. Indian markets, both their branded generics, trade generics, and consumer health portfolio all did very well. I think with this, probably some action on the Pithampur plant now, the launch of Advair can get delayed because it's OI status, which means they need to clear compliance. So that could be a bit of an overhang. And plus, there is this news on promoters looking to offload equity. So we'll keep a watch on this space. The stock is still 20 to 23 times. It's not really very expensive. Mankind anyways had a very good stellar listing. I think probably the focus is now shifting to the CDMO space, which has been an underperformer. So we've seen some uptick in DVs, Laurus. Newland especially has done very well, made a new high. And this is the space I think which probably looks the most attractive to me from a long-term perspective, because the business is very lumpy. You have a lot of molecules in phase 3. Rejection rate in phase 3 is still high, but the size of the opportunity is pretty good. So if you remember when Molnupiravir happened, the top line of some of the major companies went up by $100 million a quarter. So that's one space which excites me. Also, selectively in hospitals, we like that space. I think it's at a cusp of a cyclical recovery there after a long time.
Let's talk about these new age tech names, right? Last week we had Zomato that reported a profit. Now we are understanding, obviously, in the unlisted space, that is Meesho, that's an Indian startup, also is reporting a profit for the first time. We've seen a run-up coming in, whether today in Paytm also because of the news flow coming in. Last 1 year also, these companies have started seeing, last 6 months specifically, they've started seeing a decent up move coming in terms of the stock move as well. What is your view on these new age tech names? Where do you see them moving now?
I think both things have helped. I think one, some of these companies, including Zomato, Paytm, PB Fintech, I think the glide path to profitability guidance has been more or less met as per the market expectation. In fact, Zomato reported profit 2 quarters ahead of the guidance. Paytm also, if you see, the payment business doing pretty well. They're adding they added 11 lakh plus merchants on the subscription services. The users on the app are up 22-23%. Also on the credit side, I think they continue to do well. They have this model where it's called FLDG, which is first loss default guarantee, where you co-pay right to the main lender, which is the bank NBFC, which makes that's where the focus is on lending, reduces balance sheet risk to a little bit. And even the commerce and cloud business seems to be doing okay. So I think I think if some of these companies can demonstrate, I mean, it's too early to say, but once you are profitable, suddenly you will be asked to trade on a PE earning multiple, which again will look very expensive. So probably, if you are a high risk investor and you are in it for the longer haul, because a lot of these companies will probably make, if they survive, some of them may not survive also. That's why I'm asking you to make a basket approach, to have a slightly longer view, because probably the bigger story will play out once the numbers really start multiplying geometrically once you reach, reach an inflection point. So we track some of them. I think we like PV Infotech. I think it's a marketplace which is the most asset-light model amongst these new age companies. The insurance premiums are going up. The lending marketplace, which is paisabazar.com, seems to be doing well. And I think few quarters from now, hopefully, should be a bit of positive. That's one pocket we like. But as I said, Geo Financial Services, Poonawalla, Bajaj Finance, they are as new age as some of these names. So have a more wider perspective, and maybe you can, if you are a high risk investor, allocate a small portion through a basket approach.
Okay, fair enough. That's the approach to some of those new age techs. Had the management right here with us in our studios, and they were pretty confident about growth continuing. Brokerages as well are upping the target price, given the fact that they're talking about a strong commitment to capital discipline continuing. What's your sense on M&M within the entire auto basket?
I think very strong performance got a little overshadowed by this, news around the stake in RBL Bank. Just to purely focusing on performance, they continue to do well. In fact, I was very positively surprised with the margins on the auto segment, the SUV, where they're doing. It's now upwards of 7.5%. Also, they're clocking like 35,000 units of wholesales a month, and they're talking of increasing it by another 10,000. Very good order backlog of almost 2.75 lakh units already. So that continues to do well. The farm equipment space again, in fact, tractor, their peak margin was actually better than pre-COVID, more than 18.5%. So consolidated margins look good. Still not expensive at 15-16 times earnings on FY24. And if they continue the capital discipline which they spoke of, I think the stock has more levers to grow. Also, the EV business hopefully should unlock more value as they continue to invest in it. So I think that's another segment I'll be watchful on. So pretty constructive on M&M.
Gurmeet, I want to understand one thing is in terms of these chemical names, which have reported the numbers. We are seeing weakness clearly coming in all these names in Q1. We know the pressures coming in terms of the China dumping, the pricing pressure there, high cost inventory. But, now, is it something that is starting to look attractive, or, maybe this pressure, because some of them are saying that second half of the year we'll start seeing a recovery. So what is your thought on these chemical names? What is your view here?
So, there was over exuberance in this space a year back. Everybody was a specialty chemical company. And I think end of the day, it's a commodity business for most players, which is cyclical. And that's what's playing out. I think in few pockets, there's a lot of negative news is in the price. And some of them valuations are very, very reasonable. While I believe there will be another quarter, which will be soft, a quarter or two maybe. And with China reopening, we don't know much, how much China factor plays out in this, because in a lot of chemistries, China is extremely important. So Tata Chemicals, for example, trades at 12-13 times, reasonably, expensive. They've obviously cut soda ash prices now twice, so that made the stock under little pressure. But overall, it has agrochemical play. There's a bit of EV play through what they are making for the batteries, and the larger portion, of course, is soda ash. We also like Apcotex. I think that's good lineage. Is into synthetic rubber, etc.